GIFT City. If you are an NRI, this single phrase can save you lakhs in taxes or cost you lakhs if you ignore it. Here's what's actually happening right now. Over 60,000 crores of NRI money has already moved into a special financial zone inside India where there's no security transaction tax, no stamp duty, and in many cases, zero capital gains. Your dollar stays as dollars, your returns don't get eaten by currency fluctuations or conversions, and getting your money back out actually designed to be easy. Here's the thing that nobody talks about. Most NRIs have never heard of GIFT City, and the ones who have, they are confused whether it is real, whether it applies to them, and whether there's some hidden catch. So in this video, I'm going to break down exactly how GIFT City works, what can you invest in, how the tax math actually plays out with real numbers, and whether this belongs in your financial life or not. So let me tell you about a real case, of course not the actual name. Priya, a tech lead in Dubai, earning in dirhams, wanted to invest in India. She had been doing the normal way for 6 years. NRE accounts, mutual funds, some direct stocks. When we sat down and calculated, she had lost nearly 10 lakhs over 6 years, not to bad investments, but to currency conversions, tedious deductions, and transaction costs. When we explored the GIFT City route, her exact words were, "Why did nobody tell me about this earlier?" That's why I'm making this video, so you don't have to ask the same question 5 years from now. By the way, I'm Nikhil. I'm a chartered accountant by profession with nearly 2 decades of experience with EY, PwC, and one of India's top wealth management firm before launching my own startup. This is Finicky, where I simplify money the same way I practice it. And today I'm going to give you the complete picture. We'll cover what GIFT City actually is, why India created it, what NRIs can invest in, how the latest tax rules actually work with real numbers, who should consider it, who should stay away, and finally, whether GIFT City is genuinely a gift for NRIs or just another overhyped concept. By the end, I promise you, you won't be guessing anymore. You'll know exactly whether GIFT City belongs in your financial life or not. Let's start actually with the basics because this is where most confusion begins. GIFT City stands for Gujarat International Finance Tech City. But don't let the name fool you. It's not just a city. It's completely separate financial jurisdiction created inside India but operating by different rules as if outside of India. Here's the simplest way to think about it. You know about Dubai has this DIFC, the Dubai International Financial Center, or how Singapore has its own financial district with special regulations that attract global investments. GIFT City is India's version of that. Think of it like a financial duty-free zone, not for perfumes and chocolates, but for investments. A place where the rules are written for global investors, not domestic retail traders. Instead of dealing with multiple regulators like SEBI, RBI, IRDA separately, everything in GIFT City is governed by one single authority, IFSCA. The International Financial Services Centers Authority. One regulator, one set of rules designed for international money. The idea actually started back in early 2000s. The Gujarat government led the charge, and after the 2008 global financial crisis exposed cracks in the traditional banking system, India got serious. By 2008, the central government officially notified GIFT City as India's first international financial services center under the Special Economic Zones Act. Fast forward to today, GIFT City hosts over 500 entities, international banks like HSBC, stock exchanges trading in both rupees and foreign currencies. The goal? To capture all that offshore Indian money that used to flow to Mauritius and Singapore. And here's where it gets really personal for you. If you're sitting in Dubai, London, or California right now, wondering where the next dollar should go, this changes the conversation completely. Because investments made through GIFT City don't operate like regular Indian investments, they operate more like offshore investments, even though they're physically located in India. Let me explain what that means practically. First, most accounts are maintained in foreign currencies, dollars, pounds, euros, whatever you want. No constant conversion headaches, no rupee depreciation eating into your returns while you sleep. Second, transactions flow international style regulations. These rules are designed for global investors, not domestic retail participants. Third, and this is the big one, taxation is structured completely differently. Capital gains, dividends, interest income, transaction costs often far more efficient than regular Indian investing. And fourth, repatriation is smoother. The entire system is built from the ground up for cross-border capital movement. Getting back your money out of India isn't an afterthought, it's actually baked into the design. So instead of thinking, am I investing in India? Think of it as India is actually offering me an offshore hub similar to Singapore or Dubai, but connected to Indian growth. That mental shift is important. Now the natural question, why did India bother building something like this? For decades, Indian money and Indian investors used offshore hubs like Singapore, Dubai and Mauritius to invest globally and even to invest back into India. The result? capital, jobs, and financial expertise kept flowing outside of the country. GIFT City was created to reverse that. The government's logic was simple. If global investors and NRIs want international grade financial products, why not offer them at home? Competitive taxes, unified regulations, a proper ecosystem, and it's working. By 2025, GIFT City already hosted hundreds of funds, brokers, insurers, and exchanges. The ecosystem is expected to cross $100 billion in assets in the coming years. This isn't an experiment anymore. It's a long-term structural shift in how India wants NRIs to invest. Remember Priya, the tech lead who lost 10 lakhs to the normal way of investing? What I'm about to show you is exactly what changed for folks like her. But before that, if this is actually clicking for you so far, hit the like button and subscribe. I break down money like this every single week. Alright, let's get into what you can actually invest in through GIFT City. Let me walk you through the main categories. First, foreign currency bank accounts and FDs. As an NRI, you can open foreign currency bank accounts in Indian banks within GIFT City. We're talking about dollars, pounds, euros, dirhams, whatever your choice is. The biggest advantage? Interest earned on many of these deposits is tax-free in India for NRIs. That's already different from regular Indian deposits where TDS gets deducted. You also get joint holders nominee facilities with global access. Money transfers work through the SWIFT system, making everything smoother. And here's something many people miss. You can open GIFT City FDs in foreign currencies in trusted Indian banks like SBI, HDFC, ICICI without even needing an NRE or NRO account. The interest is tax exempt in India, there's no TDS headache, and because the deposit is already in foreign currency, you avoid repeated conversions and rupee depreciation risk. International banks like Bank of America, Citi, and HSBC and many others are also present. For conservative investors who want to park surplus foreign income safely, this is a clean, low-effort option. Second, investment funds through AIFs. Now pay close attention to this part because this is where serious wealth gets built. GIFT City hosts Category 3 alternative investment funds and global funds that invest across Indian equities, global equities, bonds, and even derivatives. But the minimum investment ticket size is $150,000. What makes them special isn't the diversification, it's how they are structured. In many cases, capital gains generated inside these funds are not taxed in India at the investor level, provided the fund qualifies under IFSC regulations. Let me put some real numbers to this. Meet Arjun, a finance professional in Singapore. He invests $2,000 in a GIFT City AIF that allocates across Indian and global stocks. Over 4 years, his investment grows to $280,000. That's an 80,000 gain. In a normal Indian structure, he would pay long-term capital gains plus transaction costs, roughly about $8,000 to $10,000 gone. But in this qualifying GIFT City structure, India doesn't tax that 80,000 at all. And since Singapore has no capital gains tax either, Arjun's effective tax on that gain is zero. That's not a loophole, that's the system working exactly as designed. For high net worth NRIs, GIFT City AIFs are genuinely one of the best ways to invest in India. Easier onboarding, full repatriability, and significant tax advantage. Third, stock exchanges. Here's where it gets even more interesting. GIFT City has its own exchanges, India INX and NSE IX. These are very different from that NSE or BSE that most Indian investors know. NSE International Exchange offers trading in Indian derivatives like GIFT Nifty plus access to leading US companies. India INX offers derivatives based on BSE indices like Sensex. Here's what makes them special for NRIs. Trading happens largely in US dollars and other foreign currencies, not rupees. No constant currency conversion frictions. You can buy US listed stocks or ETFs, invest in international bonds, or take exposure to global indices without opening an US brokerage account or routing money through multiple jurisdictions. Everything happens inside the IFSC ecosystem, and the trading hours, India INX operates for almost 20 hours a day. You can overlap with Asian, European, US markets without waking up at odd hours. Fourth, insurance and ULIPs. This is a recent addition. GIFT City insurers offer insurance products and ULIPs denominated in US dollars with global coverage. You can move countries and keep the same policies. And the tax advantages here got better in recent budgets, which I'll break down shortly. What about mutual funds? Good question. Inside GIFT City, you don't invest in the same retail mutual funds you see on Grow or Zerodha. Instead, you get IFSC-based fund structures, feeder funds, global equity funds, and mutual funds like strategies that are legally housed inside the IFSC framework. Here, the investment can start as low as $500, again, specifically focused for retail investments. These funds collect money in foreign currencies like USD, then invest in Indian equity strategies, global markets, US stocks, bonds, or diversified portfolios. Some even track indices like S&P S&P 500 or Nasdaq. The process is actually straightforward. Open an IFSC investment account through a GIFT City bank or broker. Complete KYC once. And this is again video KYC. You don't need to be physically present. Once a KYC is done, invest directly in foreign currency. No savings account in India needed. NRIs investing in mutual funds through GIFT City generally enjoys 0% capital gains tax on redemptions under Section 10(4)(d) of the Income Tax Act. Though some categories are taxed at 10% depending on holding period. Dividends face a concessional 10% rate. No NRE NRO account needed, no demat accounts needed, no TDS, no STT, no GST on management fees. As of 2025, GIFT City fund ecosystem has crossed 23 billion in committed capital. NRIs and the Indian diaspora has already invested over $7 billion. This is real committed money, not future projections. Still with me? Good. Because this next section is where most NRIs either save a fortune or make expensive mistake. Let's talk tax with real numbers. This section decides whether GIFT City is useful for you or not. Capital gains. Under financial year 25-26 rules, many qualifying investments through GIFT City, particularly category 3 AIFs, enjoy exemption from Indian capital gains tax at the investor level. Think of it like flying business class versus economy. Same destination, India's growth story, but the journey completely different experience. Let's take an example. You are an NRI in the UAE. You invest $150,000 in a GIFT City fund. After 5 years, it grows to $225,000. Your gain is $75,000. In regular Indian markets, long-term equity gains above 1.25 lakhs attract 12.5% capital gains tax plus transaction cost. But in this GIFT City structure, India doesn't tax that $75,000 at all, provided the fund qualifies under the IFSC regulations. Important nuances. India may not tax you, but your country of residence might tax you. In the UAE or Singapore, no capital gains tax, your effective tax could be zero. In the countries like UK or US, you may still owe local taxes. GIFT City optimizes Indian taxation. It doesn't magically erase all taxes everywhere. Dividends. In normal Indian investing, dividend received by NRIs are taxable at slab rates, with TDS usually deducted at around 20% under Section 195. In GIFT City, dividends from eligible IFSC securities to non-residents are taxed at concessional 10%. So, if you receive $2,000 in dividend, Indian tax impact is around $200 through GIFT City versus around $400 or more in regular structures. That's half your dividend tax reduced legally. Interest income. Interest income on foreign currency deposits and certain bonds in GIFT Cities is fully tax exempt in India for NRIs. For conservative investors wanting predictable returns without tax leakage, this is very, very attractive. Insurance and ULIPs. Here's where Budget 2025 made things really interesting. Unlike regular Indian ULIPs where tax-free maturity is capped by annual premium limits of 2.5 lakhs, GIFT City policies don't have those restrictions. If your ULIP premium is less than 10% of the total sum assured, the entire maturity amount is exempt from Indian tax. Let me show you why this matters. Suppose you want to invest 50 lakhs per year for 5 years into an insurance-linked product for wealth and estate planning. Through a regular Indian ULIP, most of the proceeds on maturity would be taxable because the premium crosses 2.5 lakhs. But through a GIFT City ULIP, tax-free maturity is subject to policy conditions. That said, I'm not a big fan of instruments that combines insurance with investments as that has an inherent leak on huge commissions. Instead, I would still stick to separate investments plus a standalone term or life cover, which in my opinion has the best value or return for investments. Transaction cost. Most people overlook this, please don't. Trades on IFSC exchanges inside GIFT City attract no security transaction tax, no commodity transaction tax, no stamp duty, and no GST. For large portfolios, these invisible savings compound quietly over years, improving net returns without taking any additional risk. It's like a small leak in a bucket. You don't notice it day to day, but over 10 years, you have lost a lot of water. GIFT City plugs that leak. Let me make this clear. In Indian regular investing, INR exposure, repeated currency conversion, STT on every trade, higher dividend tax, capital gains tax, and repatriation that feels like pulling teeth. In GIFT City, foreign currency throughout, lower or zero Indian taxes, international compliance standards, and smoother capital movement by design. Both are towards the same destination, India's growth story, but GIFT City offers completely different experience getting there. GIFT City isn't meant to replace your NRE NRO investments, it sits alongside them, especially for NRIs with long-term global income who want India exposure without the friction. So let's get specific about who is this actually for. GIFT City makes the most sense if you're an NRI earning in foreign currency and planning to stay abroad for a meaningful period, not someone who's returning to India next year. You live in a low tax or no tax jurisdictions like UAE, Singapore, or certain parts of the Middle East. Here, the India side tax savings aren't offset by local taxes. If you want India exposure without constant rupee volatility and compliance stress, your dollar stays as dollars. If you're thinking long-term wealth creation, 5 years, 10 years, generational wealth, not short-term trading or quick flips, GIFT City is for you. And if you're in the US or UK, GIFT City still helps on the India tax side, but you must evaluate it together with your local tax advisor. The benefits may be partial, not complete. Now, let me be equally clear about who should think GIFT City twice. GIFT City may not be ideal for you if you're investing very small amounts and need daily liquidity. The structures here are designed for meaningful long-term capital. If you're uncomfortable with slightly complex structures like AIFs or foreign currency insurance products, these aren't as simple as opening a Zerodha account. You are looking for guaranteed returns because market risks still exist. GIFT City optimizes tax structures. It doesn't eliminate investment risk. And if you are planning to return to India within a year or two, the regular NRE NRO route may be actually more simpler for your situation. All right, we have actually covered a lot of ground. Let me bring it all together because this is the part you'll want to remember. GIFT City is India's attempt to bring global finance inside India borders with international rules, foreign currency investing, and competitive taxation. For NRIs, it offers lower or zero Indian capital gains tax, lower dividend tax-free interest in many cases, no transaction tax, easier repatriation, and access to global trade products. Is it perfect? No. Does it require understanding and planning? Absolutely yes. But if used correctly, GIFT City can significantly improve your post-tax returns for NRIs, especially those earning abroad and thinking long-term. Here's the truth most people won't tell you. GIFT City won't chase you. It won't even send you notifications. It won't show up in your Instagram ads. It just sits there quietly waiting for the NRI smart enough to use it. Now you know how it works. Now you understand the math. Now you have seen the real numbers. The only question left is, will you use it? If you still have questions, drop them in the comments. I personally reply to every single one. And if this video helped you understand something new today, something that could save you lakhs over the coming years, share it with one other NRI who needs to hear this. That's it from me. I'm Nikhil Verghese. Subscribe to learn how to make your finances less tricky with Finicky. Thanks for watching, and I'll see you in the next one.